So the name of chapter is Final Accounts of Sole Proprietorship. Sole proprietorship means where a single man or woman is running the business. That kind of business is known as sole proprietorship business. So final accounts means when we make the three set of accounts. Let's understand what are these three set of account. Three set of account is trading account, profit and loss account, and the balance sheet. So the first account which we have to prepare is trading account. Let's understand what is trading account. Trading account may be defined as an account which is prepared to ascertain the gross profit. So when you make trading account, you ascertain gross profit or gross loss of the business concerned for a given time period. Gross profit or gross loss is the difference between the actual sales proceed and the cost of goods sold, including the direct expenses. So in short, we can say that trading account is an account from where we will understand what is the profit, gross profit, which is a rough estimate of profit, which comes by reducing the direct expenses from your revenue. Revenue means sales. Trading account provides the information concerning the gross profit. The percentage of gross profit is the amount sales will profit, and the amount of sales will show the success of the business. This is and the amount of sales will show the success of trading concern. So in this particular account, we understand that what is the amount of gross profit, and if we want, we can calculate the percentage as well. Let's see what all is the component of the trading account. First of all, before knowing the components, let me show you how does the trading account look like. So this is a format of trading account. In a particular question, there may be certain items from here. This is not required that all the items which are there in the trading account will be found in all kind of practical questions. To understand the theoretical part of it, we need to know what all are the components or the items which are incorporated under the trading account. So under trading account, first of all, we have two sides of the account. One side, which is your right hand side, is called credit side, and your left hand side is known as debit side. So it's a nominal account in the nature. What is nominal account? You have studied already in the previous classes. So nominal account which incorporate all the expenses and losses and all the incomes and gains. So on the credit side, you're writing all the incomes and gains, and on the debit side, you're writing the expenses, but only the direct expenses. So here comes the sales. Then if there is any sales return, it is reduced from here. Sales return, what is what? Sales means whatever goods we are dealing in. When we sell it to the customers, it is known as sales. Sales can be further divided into two parts: cash sales and credit sales. Cash sales means what you have sold and you have got the cash immediately. Credit sales is that kind of sales where you have sold the goods but you have not yet received the amount immediately. Then we talk about the closing stock. Closing stock is the stock at the end of the year. Then gross loss and gross profit, I will come later. What is sales return? Sales return means what your customers have returned to you. You have sold certain goods to your customer, and because of any defect, wrong quantity, the incorrect quality or something like this, because of the wrong description of the goods or something like that, because of some reason when they return the goods, so that is called sales return. It is also known as return inward. On the debit side, you have opening stock. Stock at the beginning of year is known as opening stock. Then you have purchases. Same like sales, we have purchase return also. Purchase can be cash purchases and credit purchases. Purchase of goods is known as purchases. Then purchase return is deducted from purchases. Then direct expenses. What could be the direct expenses? Expenses which are related to purchases or expenses which are related to manufacturing are known as direct expenses. So under direct expenses, you have wages, you have carriage inward, you have freight, import duty, gas and fuel, octroi, dock charges, lighting, factory expenses, water, oil, royalty on production, etc. At the end, what do? We calculate the total of credit side, we calculate the total of debit side. In case your credit has a greater balance and debit has a lower balance, then the difference is known as gross profit, which comes over here on the debit side. And if this is a reverse position, means your balance of debit side is higher and the balance of credit side is lower, so this situation is known as loss. So here is loss and here is profit, students. Okay, so these are the items which come on the credit side and debit side of profit and trading account, and at the end result which we get is known as gross profit or gross loss. Now let us go back and understand each item. What is opening stock? This means the stock in the beginning of year. So if it is a trading concern, it will have only one type of stock, that is stock of finished good. But if it is a manufacturing concern, it will have stock of finished good, stock of raw material, and work in progress also. What is the meaning of work in progress? Work in progress means when the goods are neither in the raw material form nor in the finished good, the process of the production is going on. So in between, the good state of the good is known as work in progress. Purchase and purchase return, I have already explained to you. Sales and sales return, already explained to you. Closing stock means stock at the end of the year. So these are certain items. After this, we will be doing the profit and loss account. So there are three accounts which are made as final accounts: trading account, profit and loss account. The last one is not account, actually that is a statement which is known as balance sheet. So we will be doing in the next class profit and loss account. Till then, bye, have a great day.